All right, everyone. So shares of GameStop right now are trading down about 12% after the shareholder meeting. In fact, they started selling off during the meeting. I'm going to share with you my notes and my reactions from the shareholder meeting. I think this was a buy the rumor, sell the news type of event where there was a lot of speculation coming into this shareholder meeting of what maybe they would say and this and that. And then, well, the reality is not a lot was said, and now the price has started to fall. So we did hit a low of about 23.80. We were down about 15% at that time. We've come up a little bit off those lows. And of course, all of this is in response to the excitement that we've had in the past couple of weeks with Roaring Kitty taking this massive position, which we just got the update on, was it Thursday or Friday, that he now owns 9,001,000 shares, the same position that Ryan Cohen owned before he got a seat on the board of directors. So, Roaring Kitty's got a position worth $260 million, which is a massive position, but he, as of yet, does not have his seat on the board. Now, there was a lot of speculation fueled by these different memes that Roaring Kitty's been posting, like this one right here showing Michael Scott on his first day of work at the office, and people thinking, oh my gosh, is this going to be, Roaring Kitty's moment to join the board of directors? Well, let's talk about the shareholder meeting. So there were a couple of different things discussed. Ryan Cohen began the meeting with a very brief kind of intro. It was maybe 2 minutes long. It was like a couple paragraphs spoken. Definitely, it seemed very prepared, written, and he was speaking it. He basically said that they're focusing on creating value for shareholders. That we're in an economy of high interest rates, which means the sort of minimum performance threshold bar is higher. In other words, when you've got interest rates that are high and you could get 5% investing in bonds or a CD or something like that, then why would you even bother taking the risk of investing in an equity, right? Now, when the interest rates are like 2%, they're super low, then people are, they need to get some rewards, so they'll take more risk by investing in equities. But in high interest rate environments, people will sometimes leave the equity markets because it's just not worth taking the risk. So he kind of emphasized that the company has to perform. He said that they're going to continue, it sounded like consolidating down to just the strongest stores, continue focusing on cost-cutting measures in this environment where obviously the business is, based on Q1 earnings, 29% decrease year over year in sales, and trying to improve the way the company is running right now. So you began by saying the company is going to continue its current business model, and we're going to work on improving efficiency. Okay. I mean, these are all nice things to say, but I think for some people that means that, there's a question of what's going to happen with the $4 billion of cash sitting on the balance sheet, right? Not sure yet. So anyways, that's just the intro. So he intros the meeting with that. And then there's some procedural stuff that they go through. They take a vote. They talk about the agenda for what's going to be voted on. They were voting on these, I think it was 5 director seats for the board of directors. And these were people that had already been nominated. So Ryan Cohen and then a bunch of other people, or 4 other people. So they did that. Then they opened the shareholder vote. Those passed and were approved. And then they said they were going to do some Q&A. So the meeting began at 12:36 Eastern Standard Time, so 6 minutes late. The Q&A included 3 questions, no answers. It was really a lot of Q and not a lot of A. So the first question was questions about the shelf, about the shelf registration and how they just sold 120 million shares onto the market. And there was basically they said, we have nothing more to add to this beyond what was already posted in our regulatory, let's see, bam, SEC, in our regulatory filings. So this was, let's see, GameStop's, the regulatory filings here for the registration, this kind of, but basically they said they had nothing to add beyond this. Okay, right, and what was written here. So question 1, what's going to happen with the $3 billion that they just raised and the now $4 billion in cash. I'm not going to comment on that beyond what was listed in the registration. Okay. Question number 2. There were questions about doing direct registration. So shareholders can do this. They can take their shares off of their broker and have them directly listed. This is almost like having physical stock certificates. And people like this because you're taking your shares out of the market, which means they cannot be lent to other people, so other people can short them. And now, there's other ways to do this. In theory, with your broker, you can say, don't lend my shares, but some people like to do direct registration. So there's a question about that, and they said we support shareholders doing direct registration, but it wasn't even really much of a question and it wasn't much of an answer. And then number 3, there was questions about the future of the business, given that they have all this cash. And he said he thought Ryan's intro answered that well, which was like like I said, 2-minute long intro that didn't really say anything other than they're going to work on cutting costs and, just some fluffy stuff, like nothing really substantial. So the meeting lasted about 16 minutes long, very short meeting. Basically, like I said, Q&A with 3 Qs, no As. And I kind of thought it was, just the whole thing is a bit off-putting as a retail trader, because I just feel like they really soaked up our money and converted it into cash in their checking account to the tune of $3 billion. Well, now $4 billion. And, and then they share no plans really of what they're going to do with that money, which is a huge amount of money. There was obviously no mention of Roaring Kitty getting a seat on the board of directors, which isn't surprising because that was a rumor and it was speculative, but, and I don't know that he would even want it because of the conflicts of interest that could come with his, I think, kind of role of being very active on social media, with the responsibilities that come with the fiduciary role as a member of the board of directors, where you're need to represent the best interests of shareholders. So he may not even take that role, even if he was offered it. But at the same time, you've got someone who's holding what is at this point 2% of the total float. 2%. I mean, it's kind of crazy. And I'll go back to the fact that this is not, in my opinion, a deep value trade or investment at a price of $23, because remember, this is times 4 because of the split. So we were up at, 90, this is $92 a share before the split. So buying back $260 million worth at $92 a share is basically what he's doing. He was in with $50,000 at $4, turned it into 40 million. Obviously, somehow over the last years has managed to turn it into 200 million, but now he's got all 200 million back in at the equivalent of $92 a share. So seems like a pretty high entry. And although he's up right now, at one point he was up only about $1 a share. $1.40 a share, I guess, when we hit the low here of 23.80. No, sorry, he was up only 40 cents a share at 23.80. So this was a position that at one point his combined positions were 900 million market value. Not that it was liquid and that he could have necessarily sold at those prices, but it was worth 900 million, and it came down to being worth, gosh, I guess his cost basis, but that's the value. So anyways, it's 9 times 23. So 180, so like 200 million or something like that. So it's like 700 million that disappeared in unrealized gains, and it's thanks to GameStop. And you think about how much money of unrealized gains was lost by retail traders thanks to GameStop. Where'd that money go? GameStop. And now that's money on their balance sheet, essentially, because they sold shares. They sold you shares. And that's what I think is really kind of a shame. But we'll see what happens to this company over the future. At this point, Roaring Kitty still has $6 million of cash. So if he really wants to YOLO, he could start putting this on out of the money options, and continue to, you know, just go deeper into it. But, I mean, you're buying on a day when it's down is not a bad strategy in general. But my feeling is that retail traders have gotten burned on this now several times. And a lot of Reddit traders who are YOLO and will hold for life, they're already in. They're not. How many more Reddit traders are going to be able to add to this to send it back up to $50 a share? And remember now, to send it back up to $50 a share, there's a whole lot more supply to the tune of 25-30% because these shelf registrations. So now to get to go back up to those levels would take a level of demand that I don't know. I don't see it happening. But I also want to remind myself that just last week, a week ago Thursday, when Roaring Kitty scheduled his stream, over the course of like 5 hours, the stock did go from $30 a share to 68. So it can move very quickly when, I don't know, the sentiment is just right. So, of course, that was before the additional 75 million share offering. But anyways, this is kind of where GameStop is at right now. We're coming back down. Roaring Kitty's in a big position. He's shown his hands to the market. I think retail traders are getting discouraged. I'm discouraged. I know that I'm a trader, not an investor, but I think that the company, it's hard to be invested in a company that it doesn't feel treats its shareholders, it's like, would GameStop be here if it wasn't for all of the Reddit traders, or would they have been just sent into bankruptcy like other brick and mortar companies? I don't know. But, GameStop was a victim of incredibly high levels of short interest, and that backfired on the greedy short sellers, and it created an epic short squeeze. But it also became part of kind of a political movement, of retail traders' opportunity to stick it to the man, so to speak, the deep pocket hedge funds. But now it feels like the institutional traders, once again, are the ones who are winning, and the company GameStop itself. So we'll just have to see what they're able to do with this $3-4 billion of cash that they have. If they can unveil a compelling business plan around how they're going to use that money to, take GameStop into the future. So 25 years from now, 30 years from now, this company's still around. It's an interesting story, but unfortunately, there were no trade opportunities on this for me today. So I got green on other stocks this morning. I traded TRNR, which went up this morning about 180%. So I traded that. I got profit on that. I was happy with that. And GameStop, at this point for me, is out of play. It's down 10%, but I don't think I would trade it personally unless it breaks some pretty key levels on the daily chart, like up around 40, 50, 68, 80, and then, higher, up 100. And so I just don't see that happening. So I don't, I think it might be, we're probably, I'm sure we're not hearing the last of GameStop, but I think that it's going to be out of play for a while at this point. The only thing that's going to get it going will be another set of rumors, because the news hasn't helped it. It hasn't put out news that's supported the move. It's put out news that's, thrown sand and water on the excitement, right? It's put out the fire. They put out their own fire with the offerings, with the earnings, which, they had to release the earnings, but they chose to release them early with the offering. So it just feels like they really stamped out the momentum. So I don't know that we're going to see it come back anytime soon. But anyways, that's my update here on GameStop. Watched the shareholder meeting. Wasn't impressed. It was very short. And I feel like it was, probably somewhat insulting for a lot of retail traders who have so much invested and are such big fans of GameStop. And they kind of cashed in on all of us. So I'm a little disappointed as well, but we'll see. Maybe there'll be other opportunities in the future to get some trades on it. And in the meantime, I'll stick with trading the stocks that I know are volatile each day and where I can find a little bit of profit, a little bit of opportunity. That's going to be stocks that have high relative volume, have breaking news, some type of catalyst. are generally priced between 2 and 20 are up at least 10%. And fortunately, we usually find a couple of stocks like that, each day. So that's what I'm going to be doing. And when GameStop comes back into focus, if there's another moment in time where it makes sense to trade it, I'm happy to trade it. I've traded it a number of times over the past several years, but as I mentioned in my episode on Friday, I've made about $300,000 trading GameStop, and that amounts to less than 3% of my gross profit from trading across the board. So GameStop doesn't represent a very significant amount of all my profit because, there's only been a few times where it really fit within my strategy to actively trade it. And I was grateful for those opportunities. But I have a very specific strategy that I trade every single day. And most days GameStop doesn't fall within it. So I'm going to go back to trading my regular strategy. And I'll thank you guys who have been tuning in as always. So I hope you hit that thumbs up. I hope you're subscribed to the channel. And if you want to watch me trade, I'll be trading, of course, logging in every day. Bright and early, so I'll be back at it first thing tomorrow morning streaming for Warrior Pro members. Okay, I'll see you then. I'll remind you guys, as always, that trading is risky. My results aren't typical, so manage your risk, take it slow, and I'll see you back here tomorrow.